So I just wanted to give an update on my stock market portfolio. So it looks like I missed out on Facebook because I wanted to buy it at 165 or in the 160s, and it's starting to go back up. So today's high was 178, so that's great for those who bought it at 170 or even lower. So I don't think it's going to come back down anymore. I think it's headed towards the 200s again. So I'm going to look at something else instead. I put an order on Ford options, 10 contracts at $1 because I think I'd be able to make double my investment with at that price. So basically a strike price of $9.87 and a call premium of $1. So that means that between now and January 17th, 2020, Ford needs to reach at least $10.87 for me to break even. And if you look at the chart, if you look at Ford chart, if you just look at 6 months, it was trading at 1250, close to 1250. So it will easily in 2 years, it's got 2 years to at least surpass 10.87 for me to break even. And obviously if it reaches 10.87 or even 11 before 2 years, the call premium is going to be worth more. So I could just sell the call option. So for me to sell at around $2, the stock price would have to reach around 11.20 right now or in the next 2 months. So right now Ford is trading at 10. If it reaches 11, so that would give it a 10% gain. But on the option side, it could reach, if I buy it at 1, I could probably sell it at around 2. So that would be a 100% gain. So that's why sometimes I like to buy options, because of the potential. Although I am limited by time, Ford would have to reach a certain price before January 17, 2020. The odds are good though. So that's why sometimes I'll take the risk with options, especially Ford options, because they're well priced. So I put an order at 1. Right now it's trading at, here, let's look it up. So 987. Call options are trading at around 110 because the stock price itself went up a bit today. I sold my position with Procter Gamble. I sold it at 82.5. It reached 83 today. And the reason I sold it is because I had a small amount in it. I started off with $400. So 6 shares at $74. So $444. And I wanted some liquidity, so I wanted to sell something that was profitable, and I felt like there was no point waiting for the stock to go higher, because even if it goes higher dollar wise, I'm not going to make a big amount because I only put in $444. So that's a mistake of mine to trade with a small amount, but it was the only amount I had at the time, and I didn't want to miss out on a good price. So whatever I had, I just bought some Procter & Gamble, and yeah, so now I just sold it. Small profit. Percentage wise, I think it's a good profit percentage wise, but because it's a small amount, so it's an 11% profit, but because it's a small amount, it was only, so I made $8.50 per share, but I only had 6 shares, so $50 minus the fees, so it's about $40 profit. But I just wanted some liquidity in order to buy something else. So now I have a buying power of 852 US and 1110 Canadian. So which is, I think, the minimum to buy something should be, you should use $1,000 in order to make decent profit after fees. So this is actually 11%. Here, let's see in how much time. So this is my TFSA. So Procter & Gamble I had bought April 24th and I sold August 3rd. So in about 3 months. So made about 11% in 3 months with that trade. So if we look at the rest of my portfolio, we've got H&R Block that I bought at 23.25. I put an order to sell it at 26. If we look at orders here, selling at 26, which gives me about 11% profit. 26 divided by 20. So 26 divided by 23.25. Yeah, 11%. Right now it's trading at 25.39, giving me 9% profit. Got my Ford shares that I bought at 10.95. Obviously killing me right now because it dropped all the way down to 9.85. It's at 10 right now. So I'm at giving me an 8% loss. But I see that as an opportunity to buy some more shares, which I did in my RSP account. I bought some Ford shares, as you can see here, 117 at $10. But I also want to buy some options. I've got Starbucks that I bought at 51, trading right now at 52.27, giving me a 2% profit. And I adjusted my order to sell it at 56 to make a 10% gain. I've got AT&T that's starting to go back up again. It's at 32.22, giving me not even 1% profit. And this one I want to sell at 37. I actually got dividends from AT&T, and I just want to mention something, that even if you have a TFSA, if you're holding US stocks and you're collecting US dividends, you're going to get tax withheld on your US dividends at about 15%. So as you can see here, I got 13.6 in dividends, $13.60 in dividends from AT&T, but there's a tax withheld because it's a US stock and I'm a Canadian resident, and that amount is 15%, and here I can show you. So AT&T pays 50 cents per dividend. I've got 32 shares, so that should have been $16, but I got $13.60 instead, 85%. So 15% is withheld when you hold US stocks, even if it's in a TFSA. So it's not bad. So if the yield for AT&T is 6.21%, in my case, as a Canadian resident, it's going to be 85% of that. So about 5% yield per year, which is still not bad. So obviously, if you can trade Canadian stocks, that would be best to avoid getting tax withheld, especially if you're in a TFSA, and also to avoid the conversions, losing money on conversion. But sometimes there are more opportunities on the US side, so it's hard to stay away from the US stock exchange. And the US stock exchange is more volatile than the Canadian stock exchange. So there's more movement, so more movement means more potential to make profit. So if we go to my RSP, got my American Airlines still that I bought at 37, trading at 38.49. Let's see what I put an order on it at 42. Yeah, so I plan to sell at 42, giving me a 13% profit. So I could probably adjust it maybe at 41. We'll see when the time comes, when it gets closer. I've got the dividend 15 split corp that's not really doing anything for me. It's not paying me dividends or anything. So holding on to it, we'll see what happens. If it drops to 5, I'll probably buy some. If it goes to 7, maybe I'll get rid of it if it's not paying me dividends. But the reason I bought it is because of its potential dividends. I think it was paying almost 17 or 18% dividends per year. I've got Ford that I bought more Ford at $10, and I've got the old options that I bought at $1.50, trading at 109, giving me a 27% loss. So as you can see, options, they move. There's more movement. They're more volatile, but as you can lose more, you can also gain more in a short period of time. I got L brands that I bought at 31.35, trading right now at 32.51, so that's good. Starting to go back up a bit, giving me a 3% profit. Let's see, my sell order on L brands is about 37. So 37 on 31, it's about, I think, close to 18%. 37 divided by 31.35, 18%. I got WestJet that's hurting me right now that I bought twice. Once at 20 and then once at 17.50, so giving me an average price of 18.65. But as you can see, it's trading at 17.35. It dropped because it lost money in the last quarter, and even after it dropped, it started to go back up. It went to 18.50 about, but today it's dropping again. So anyways, not sure if I'm gonna buy some more, probably not, but definitely holding on to it. Got Walmart that I bought at 86 a while back, and it's at 89 right now. Book value of $774. So I didn't put much in it either. So it's similar to the Procter Gamble. Although Walmart is a safe stock, I should have bought more when it reached 82. But yeah, anyways, right now it's at a 4% profit. I think I have an order at 100 because it's pretty safe stock. I don't mind waiting a long time with this stock. So yeah, order at 100 plus dividends that I'll be collecting while I'm waiting. So that's on my Questrade side, RSP and TFSA. So as you can see, my total balance in Canadian in my RSP is 8,800. It was above 9,000. So there are two reasons why it dropped. First, because of my Ford options, and second, because the US dollar is dropping in value, and because I have most of my holdings are in US. So when the dollar drops, the equivalent in Canadian drops. So I got about 8,800 in my RSP in Canadian, if I convert to Canadian, and my TFSA 6,600, so 15,400 on the Questrade side. If we go to Investor's Edge, in my RESP, I've got Bank of Nova Scotia that I bought at 76. Right now it's trading a little bit above that. Got some dividends paid out for Bank of Nova Scotia. I've got Enbridge that I bought, I believe, at an average price of 45, trading at close to 47 right now, but got a lot of dividends from Enbridge. So on my Canadian side, I've got Cenovus Energy that I bought at 15. This stock was really a bad choice. I bought way too high, and it's been over a year, and the closest it reached to 15 was 14.85, and I didn't sell. So totally regret not selling and just taking my small loss and just moving on and buying something else. Got Enbridge also, I think in the TFSA I bought at an average price of 48, or it's the opposite. I think RESP is an average price of 48, and in my TFSA it's an average price of 45. So I'm actually profitable right now with this stock, so I could probably sell if I wanted to, but it's got potential to go higher, and I'm getting good dividends from this stock. Here, let's look at book value for Enbridge, and I've got Hudson Bay that I don't even want to talk about. And if we look at the US side, General Electric also killing me, but I bought at 17. Kraft Heinz that I bought at 75, but it went up today 9%, so that's good. It's trading at 64, so getting closer to the price I bought it at. And I've got some New York Mortgage Trust that also went up today, and this stock I hold simply for the dividends. Pays about 13% per year, but because I'm not a US resident, I'm only getting 85% of that, so I'm getting about 11% per year dividends on that stock, so it's pretty good, especially since my goal is to make between 10 and 20%. I want to talk about Wells Fargo, how bad news came out on Wells Fargo, and yesterday something regarding their mortgage loans. Wells Fargo to pay $2 billion fine over loan quality. So you would think after news like that the stock would drop, but it didn't. It actually went a little bit higher. So that's why I find that stock prices do not correlate with good news or bad news. It's like there's information in the background that moves the stock that the average investor does not have access to. So that's why sometimes I don't like to bother myself with too much research, because at the end of the day, whether I do my research or not, the stock will move the same way. It goes up a bit, goes down a bit, goes up a bit. So as long as you buy relatively low and sell relatively high, you're gonna make a profit. And as long as you deal with only blue chip stocks or big name companies that you know are not going to disappear, that you feel confident putting your money in, so you don't have to worry and you can sleep at night. And while you're waiting, you're collecting dividends. So some stocks to consider. Well, if you want something risky, you go for IQ. It's like a Chinese version of Netflix, but stock price keeps dropping, but the potential is high. Personally, I don't think I'm going to buy it, but I know a lot of people are talking about it, and it's got good potential because it could be the next Netflix. There's eBay. If you like eBay, it's trading at a 52-week low. Doesn't pay dividends though. 1 year target is $44, so it's got potential for gains. There's WestJet also, of course, trading at an attractive price right now. 1 year target is 18.66, pays 3% dividends, and is the second largest airlines in Canada. I'm watching the Bank of New York Mellon closely. It's dropping a little bit. It's slowly dropping. It's at 52.5 right now. 1 year target is 59. 52-week low is 49, so it's trading close to the 52-week low. At 51, I'm probably going to buy some. And this stock is actually on Warren Buffett's portfolio, so it gives me confidence to buy in. Facebook, of course, if you're going long term, and Ford right now at $10, greatly priced, paying 5% dividends per year. 1 year target 11.41. But these are just estimates. Sometimes it surpasses this number easily. So if we look at which stocks dropped hard today, over 2 billion market cap. So you've got IQ that I mentioned earlier, dropped 7% today, and you've got all these other stocks here, but I don't know any of them. You've got Square, which is a payment processing company, pretty good. Dropped 6% today, trading at 68. So let me look up Square actually. Curious. So 52-week range is 24 to 73. All right, so it's closer to the 52-week range. That doesn't make sense. This is a 1 day range. So it's closer to the 52-week high. So that alone doesn't interest me. It doesn't pay any dividends either. It's a great company though. So it looks like it's a new company. It started trading on the stock market recently. Looks like it started end of 2015. So it doesn't have much history, but it's been going up since its inception. Let's look at reports. Recommendations, a sell recommendation with a 12-month target price at 58. Okay, it doesn't mean anything necessarily, but fair value 44. Okay, maybe not a good stock to watch. Maybe keep an eye on it, but not to buy. Let's look at financials. So revenue is increasing definitely. 850 million in 2014 and 2 billion in 2017. Net income though, they've been losing money, but they're losing less money as the years go by, so that's good. They're probably spending a lot on marketing as they are a new company. So let's do a quick stock screener on Canadian stocks. Market cap greater than, let's say, 900 million, and dividends more than 3%. We've got 99 matches, and we're gonna sort on 1 year change. We've got Chorus Entertainment, WestJet. So WestJet is pretty good. 1.6 billion market cap and trading near a 52-week low. We've got Laurentian Bank, but not too sure of Laurentian's future. You've got Hydro One. So Power Financial Corporation is a pretty big company in Canada. Market cap 21 billion, pays 5% dividends per year. So it's actually trading near a 52-week low. So this one's interesting actually. Let's look at the charts. So yeah, 1 year it just reached a new 52-week low. 2 years it's been trading above 30 for 2 years. For 3 years also it's been trading above 30. 4 years. So actually this is pretty interesting. For the past 5 years it's been trading above 30, which makes this new 52-week low pretty attractive. And if we look at 10 years, yeah, okay, so it's been trading only since January 2013, so about 5 years, yeah. And then before that it was below 30, so it still looks pretty good, pays pretty good dividends, 5% per year. Let's look at financials. Important thing is that it's making profit every year. So revenue 41 billion in 2014, 49 in 2017, so it's growing. Let's look at profit. So yeah, 2 billion in 2014 but 1.8 in 2017, so profit is decreasing slightly, but it's still making a profit of 1.8 billion per year, so very good profit. Let's look at the last 4 quarters. Yeah, every quarter was a profitable quarter. They had, even their last quarter was a bit higher than the others. Let's look at reports. So Morningstar gives it a fair value of 35, so right now it's trading at 30, so could be a good buy. And this report gives it a hold recommendation. Let's look at news, if anything special happened. So don't see any bad news, nothing that would make the company disappear or go bankrupt. So definitely this stock is a good buy. I'm definitely considering it at this price. Let's just see what I have available. So I've got 1100 in my TFSA and RSP. I guess I can cancel my order on the Ford options here, which would give me, my cash is in Canadian anyways. So I might actually change the order and put it on Power Financial Corp at 30. Let's just look at the options. Let's use Questrade to look at the options. So the longest they have is January 18, 2019, so less than a year. So that's not long enough. So it's 168 days, so it's half a year. Yeah, I need a little bit longer than that. But let's just look at half a year, what it gives us. So let's say at a $30 strike price, the call option would cost you $1.15, $1.20. So it's actually pretty good, because if you think that in less than a year this stock is gonna go above 31 or even 32, then it's perfect. You can easily double your investment. But of course, if it doesn't reach 31 in less than a year, then you just lost whatever you put in that option. So that's why half a year is not enough. I prefer to go for 2 years. It gives it enough time to go back up. But half a year, I mean, the stock could probably continue to go lower and then only start going up after 6 months. So then you just lost your money. But if you buy the stock, then you could wait 6 months and collect dividends while you're waiting. And then when it reaches 33, 34, 35, after 6 months, then you can sell. Because you can't really predict at what price it's going to be after 6 months, then sometimes that's why it's safer to buy stocks. Or if you're going to buy options, you need to buy longer expirations. So I'm going to think about this stock. Definitely something to consider. Keep you posted. If you have any questions, leave them in the comments below. Any stock tips also, leave them in the comments below. And if you're going to open an account with Questrade, use my referral code at the bottom of the video, so we can both get between $25 and $250 depending on your initial deposit, of course. Thanks for watching.